why should we simplify? Well, for starters, because complexity clouds your judgment, and it interferes with your ability to make the right decisions. Having so many indicators at your disposal has several downsides. To begin with, the overwhelming amount of information coming at you from all of these indicators can lead to something known to psychologists as the paradox of choice, which means that the more choice you have, the less able you are to make a decision. And secondly, due to the vast amount of available indicators, it is nearly impossible to differentiate the ones that actually work from those that are based. So, however, the most painful side effect of this broad selection of, well, sometimes contradicting indicators is the fact that it can lead to cherry picking. So if you like a certain stock and you're thinking about buying it, your brain will prefer indicators which actually support your buy thesis, even though other indicators might scream at you not to buy. This psychological trap is known as confirmation bias, and this will absolutely destroy your returns if you let this control your decision-making process. So that was the first reason of why we should simplify. The second reason is to remove emotions from the equation, because emotions are really the #1 reason why people lose money on the stock market. This graph, it shows that nicely actually. They buy when prices are increasing because, well, they get greedy and they don't want to miss out. And they sell when prices are dropping due to fear it will go even lower. This strategy, it guarantees underperformance. So to avoid falling into this trap and to become immune to these emotions, you actually need a simple, systematic approach. And Buffett's famous saying is to be greedy when others are fearful and fearful when others are greedy, which is the exact opposite of what this chart depicts. The third reason why we should simplify, it's because all the investment grades do it. I mean, this may be a bit of a, well, painful question for some, but so apologies for that. But how many day traders are there in the Forbes 500 list? And, well, there are not many. Actually, there are 0. However, there are several value investors in there, like Warren Buffett or Carl Icahn and George Soros. I mean, Buffett doesn't even have a computer at his office, so, I mean, how is that for simplification?